Stocks making a small recovery here just in the last few moments. Let's get into the details, the technicals, and the volatility with Kevin Green, our senior markets correspondent, our vol guy. KG, how bad does it get here?
I think we're actually resolving this right now here, Oliver, and it might be resolving to the upside, actually. I mean, the selling pressure has been very aggressive. It kind of depends on these next two candles, the next 10 minutes or so on where we go here. But obviously, we've seen a lot of pressure to the downside. We actually have a well-defined channel that we've kind of been tracking here all day. You can see that where we've gotten to that upper end or that resistance level, we usually see then some form of a bearish candle, whether it's a shooting star pattern or we see some form of a doji and then a engulfing candle, and then we move to the downside and make new lows. We're kind of resolving this right now. We kind of had an indecision candle, that red candle that we have before this green one, we're pushing up. You want to just continue to push up higher. I think if you're a short seller right now, the risk obviously is going to be over the weekend. What type of news do you get out? Obviously, the White House is seeing exactly what's happening with these markets, and they might try to announce something, as Kev was just talking about here, announce something in order to try to ease or calm the markets so far. So right now, if you're looking at the upside, 52.20, that has been an area of resistance. To the downside, there's going to be some pen risk at 5100. We were able to resolve that. If we get a breakdown even further, it gets a little bit tricky when you're looking at the options, because basically below 5100, they start going in 10 increments. So they don't have the $5 increments, if you will. But if we do get a breakdown, you could look at that 50.1875. Now, obviously, this is past the circuit breaker time, but the 50.18 level would be a 7% pullback on an intraday basis, which would be fairly aggressive. So that's what we're kind of mapping out here. Let's see what the market on close order is going to be. It looks like we're trying to resolve right now. But I would be I wouldn't say surprised if we continue to break down. It could be a thing, but there's a lot of risk over the weekend for the bears that they could get trapped if we do have some form of an announcement. And I'm sure that they're going to be doing damage control.
That's a fun thought.
News network.
I love that point. I love the way you put that. Bear trap, get too cocky, maybe get your foot stuck on something positive over the weekend. I mean, if you don't think it's possible, look at some of the retailers today. Nike up 6%, Lulu up 6%. You know, it's a small move on the chart compared to where they were. But if you're on the wrong side of that trade, that can rip your face off.
Yeah, I would agree. If you're looking at the NYSE advanced to declining issues here, this is where you kind of have either a bright spot right now when it comes to the market, and or this could be your biggest risk. Right now, we are seeing that line, that blue line, actually moving higher.
We got to figure out which one.
Yeah, that blue line is going to be right. And here's the reason why. That blue line moving up means more stocks are kind of advancing here. Obviously, we're really in the negative, but that could drag up the S&P 500. Once again, the risk, though, is that we actually have a fake out, and then a lot of these stocks really sell off going into the close, and that would impact the S&P 500. This is the area of the market. It's not the Mag 7 right now. It's not even the top 25 stocks. It's everything else that could get some weight on it, and then push the S&P 500 down in an aggressive close. That's your biggest risk. But for now, it's trying to hold up.
Talk vol to me, KG, VIX. Yesterday, I really enjoyed our conversation, and I guess the day before, too, about how volatility as measured by VIX was staying below the recent sell-off highs, and it was reflecting the notion that folks were selling equity rather than buying hedges to protect their equity, with vol moving up sizably today and holding up pretty well above 40 here. What does that tell us is happening?
Yeah, you're seeing a lot of activity when it comes to the options flows, large block orders actually to the upside and to the downside here. Actually, it was a trade, I believe it was around $13.1 million worth of premium at the 58.75 calls that were expiring in December. That was something that was very notable. And then you're still getting activity in the 4,600 puts to the downside here. But you're seeing a lot more layering on of positioning just in general for big block traders, not like the small retail traders. I think they're kind of gotten a little bit scared off because vol is so high, premiums are very expensive, and you're not just seeing the proper moves, if you will, because of the events that are kind of going on here. I would keep an eye out on volatility. I would say that we're kind of closer. We're kind of closer to, I don't want to say the end, but it's very hard to go long vol here for VIX. And we kind of talked about this yesterday. Look at another product that gets you maybe a little bit better risk reward ratio than probably VIX. VIX options right now are completely blown out. So it's not, I mean, unless you're really trying to take a shot, it's really hard to really position within the VIX options complex, in my opinion.
Okay. Tricky when you're up this high, right? It's just
Yes.
you really got to get low probability events to kind of keep happening. But look, it's this is the third bear market in 5 years, so it's pretty high frequency. So who knows what's possible? Anything else burning, KG? You want to get off your chest before we see you at the closing bell?
Yeah, two things that just really quick. Let's
Okay.
just hit two quick charts.
Okay.
This S&P 500 equal weight already in its wave 3 formation. Wave 3 is basically when you're looking at market cycles, usually we go up in 3 waves, we go down in 3 waves, and then we kind of have, we can add on to them or subtract them here. I'm kind of looking at the equal weight. What's very interesting about this is that this has obviously been the biggest drawdown that we've had, the most aggressive one, which kind of aligns with that Elliott Wave theory. The third wave is usually the most aggressive wave to the downside. 6280 is going to be very key. I'm not sure. I'm not going to say that this is a bottom, but this basically is the resistance level that we had way in the past, about maybe 3 years ago, where it was actually an area of resistance for about a year and a half. So area of resistance now flipping to an area of support. Let's see how we resolve that when it comes to the equal weight. I think that's going to be key. And for the S&P 500, where we are at right now, 5125. Is the 38.2% retracement level from the October 2022 lows. So this is actually a very key area here. And you could see a little bit of a bounce off of this area. Who knows? But I find that very interesting that we're kind of gyrating up right around these levels going into this weekend. MACD, the fast MACD, that blue line there, did cross over that zero line. That is bearish. And we're waiting for the yellow line, which is going to be the slower 26 EMA to kind of catch up there. But interesting area. And you're looking at around 4,800, Oliver. I mean, that would be a pretty decent little pullback.
That's what Mike Purvis was looking at. You and Mike, same boat.
Yeah. That would be, yeah, and that kind of aligns with the S&P equal weight, right? And you can make the case, maybe not everything else sells off, but maybe Mag 7 has a little bit more to go to the downside in some of these names. That would kind of give you that composition that would kind of align up with the S&P 500 equal weight and the SPX.
Or maybe, because remember the first big leg when Apple had a couple really bad days, then the market started to rotate back into some of the tech, but you did have some of the value stuff that dropped as well. So there's a few ways that could potentially resolve. I've loved learning about the way you see the market, KG, and I think you might have made me a believer in waves, which I perhaps never thought possible. It's gravity. So I love it. Thank you, Kevin Green. Good stuff. Senior markets correspondent. When I came here, I didn't really believe in much technical stuff either, having a basically pure economic kind of grounding at Bloomberg. So you're always learning.